In the world of investment, Michael Burry recently achieved something inconceivable. He sold every investment in his portfolio, every single one. As a seasoned investor, you should take note of this activity because it is so unusual. When a notable investor believes the stock market is overvalued, you should constantly look at what they are doing inside their portfolios if you work at an investment fund. They might start by shifting some of their portfolios into defensive stocks. These are stocks that currently do well when the stock market crashes. The investor still has equities in their portfolio. They just make sure they have a good number of these so-called defensive stocks. Additionally, these investors can reduce their stock holdings. In other words, they might sell 10, 15, or even 20 of their stocks and cash the proceeds. Given this background, it is easier to see how unusual Michael Burry's action is and why it merits attention. You can only succeed financially if you back up your words with deeds. The collapse of the housing market, which sparked the great financial crisis and cemented Burry's reputation, serves as an illustration of this. Numerous investors likely believed that the housing market was highly overvalued. It was widely known that house prices had risen dramatically. That was evident to everyone, even in their own neighborhoods. It was also well known that less creditworthy applicants were being accepted. View the US government's publicly available data in this graph. The median credit score of home buyers showed a considerable decline. All of this is to indicate that if you pay attention to what others are saying, a housing bubble will become obvious. The symptoms were so plain, they will say in retrospect. There is one significant distinction between them and Michael Burry though. Michael Burry put his money where his mouth was and staked his entire career, as well as millions of dollars, on the US housing market's demise. Michael Burry is displaying the same level of conviction as this man, who had such strong confidence in his theory that he was willing to actually stake everything on it. The information that Michael Burry has been discussing is how the stock market is highly inflated and overvalued. Over the past 12 to 18 months, he has been very outspoken about those opinions. However, there was always one major enigma around why Burry's behavior didn't seem to match what he was asserting. The stock market was in a bubble, according to Michael Burry, and it would soon burst. Even though he owned a sizable number of stocks, he claimed that many of them weren't necessarily considered to be inexpensive. Look at Burry's resume. He owned stock in Google, Facebook, Booking Holdings, Kayak, and the parent companies of the travel websites Booking.com and Priceline.com as of April of this year. Additionally, he owned the pharmaceutical businesses. He also owned a car company and the payments firm Global Payments. These businesses would surely be in danger if Burbank's crash materialized. People believe it's accurate to state there was a substantial discrepancy between what Burry was saying and his investment strategy. He was arguing that the stock market was in a bubble and would soon crash on the one hand. Check out Burry's tweets from the previous year. The question, what's happening in the markets? The stock market is, by 2 orders of magnitude, in the biggest speculative bubble ever. He still had a sizable stock portfolio despite the fact that the stock market is arguably in the biggest speculative bubble in history. Some people saw this to be a major paradox. At least now everything has changed. By selling all of his investments, Michael Burry is, as they say, putting his money where his mouth is. When people refer to him as having sold his stocks, they mean that he actually sold all $200 million worth of them, selling 250,000 shares of Sportsman Warehouse Holdings, 66,700 shares of Global Payments, 600,000 shares of Stellantis, 76,200 shares of Nexstar Media Group, 300,000 shares of Innoventive, 80,000 shares of Meta, 75,000 shares of Cigna, 130,000 shares of Alpha, 750,000 shares of Warner Brothers Discovery, 800,000 shares of Booking Holdings, and 300,000 shares of Bristol Myers Squibb was Burry's most recent activity in his portfolio. The brewery did, however, buy 360,000 shares of Geo Group, one stock. The operator of private prisons is Geo Group. This indicates that the business owns and runs prisons both domestically and internationally, and that the government pays the enterprise to run those facilities. If Michael Burry's decision to sell everything and buy shares in a private prison doesn't say anything, then nothing will. The best moment to start investing in equities is when things are bad, and people use Moo to do this. Moo is a one-stop trading app that streamlines the entire process for investors. They must trade equities, which requires monitoring price charts, engaging in trading, and interacting with other investors. What distinguishes Moo from other trading platforms? Users of Moo's 18 million strong global user base can view what real investors are saying about the equities they are interested in real time. It has a self-developed, industry sector-specific intelligent stock screener. It also offers a self-created stock comparison tool, which is well liked by US audiences, that enables users to examine the circumstances of individual stocks using full-scale indicators. When you deposit a specified amount into your account during the promotional time, you'll be eligible to receive up to 10 free stocks. You'll want the exclusive offer that is available to our Australian users on it as well. Why did Michael Burry sell every stock he owned? If you didn't know, Tweety prefers to communicate with the world on Twitter. He rarely gives interviews, in contrast to the majority of well-known investors. Burry hasn't given an interview in years. In fact, the best place to seek information about Brewer's stock sales is his tweets. People search Burry's most recent tweets for hints as to why he made the audacious decision to sell all of his investments. To uncover the topics that people are actually interested in, you must filter through a wide range of tweets, ranging from his favorite music to politics. They were able to identify 2 tweets that some people found noteworthy and that clarified Burry's perspective. Here is the initial example. The S&P 500 is down 25 to 26% in the first half of 2022 when adjusted for inflation, and the Nasdaq is down 34 to 35%. Multiple compression has caused a 64 to 65% decline in Bitcoin. The next hurdle is profits compression, so we're almost halfway there. Halfway there is the essential phrase here. Burry tweeted this at the time when the S&P 500 was trading above 4,200, which indicates that he believes the S&P 500 will decline to 2,800. Burry predicts a 35% decline in the stock market. To fully comprehend this tweet, you must grasp the math underlying it. Burry uses the terms earning compression and multiple compression. You must comprehend how stock market valuation works. Its underlying arithmetic is very straightforward. In other words, in order to determine a stock price, investors first determine the earnings of a company and then apply a multiple to those earnings. That ratio illustrates how bullish investors are. Simply said, the larger the multiple, the more confident the investor is in the future. Investors are more pessimistic when the multiple is lower. This is the simplest and most direct way to think about it. However, there are a ton of additional factors that play a role. For illustration, suppose a business has $10 in earnings per share and investors place a 25 times multiple on those earnings because they are so enthusiastic about the company's growth potential. By multiplying the $10 in earnings per share by the 25 times multiple, it can be determined that the company is trading at $250 per share. But suppose investors begin to worry about the state of the economy. Investors are thus more negative about the company's prospects. By using the same math as before, they are only willing to grant it a multiple of 21 times. This decreases the share price of the companies to $210 per share. The stock is now 16 less expensive than it was at its previous price. A prime example of multiple compression is this. In his tweet, Burry mentioned action. Investors that are less enthusiastic about a stock's potential growth reduce the multiple they are willing to apply to it, which is known as multiple compression. The possibility of the company's value is lower as a result of this multiple causes the stock price to decline. In this instance, it resulted in a 16% decrease in stock price. Let's examine how earnings compression can lower the stock price further now that multiple compressions is in effect. Let's imagine that the economy begins to weaken and that this causes the company to earn less money than it did previously. From $10 per share, this decreases all the way to $8 per share. Our lower multiple of 21 times multiplied by this $8 per share gives us a stock price of $168 per share. This illustration demonstrates how earnings compression and multiple compression can affect stock prices. Let's revisit Burry's tweet. Multiple compression is the cause of the lowering prices we have observed so far this year, he claims. The next step will be earnings compression, he continues. Going back to our example, you can see how multiple compression resulted in a 16% decline in our stock price. The stock dropped another 17% when earnings were similarly compressed. Stock prices may fall when the stock market is impacted by both multiple compressions and earning compressions. People believe it is crucial to draw attention to something in a tweet that isn't receiving much notice. The tweet was published on June 30th if you carefully examine the date. The month of June officially ends on June 30. So, why is that relevant? Large investors like Burry are forced to disclose the names of all of the stocks they purchased and sold during the previous 3 months for this reason. According to Burry's most recent federal report, he sold every stock in his portfolio between April 1 and June 30. Burry is a very intelligent man who is aware that his portfolio is being watched. The fact that he tweeted this on that particular date was a coincidence. People believe it's his attempt to leave hints in his portfolio about the motivations behind his actions. Burry anticipated that the market would drop more after he tweeted this, although it hasn't actually done so since June 30. Technology stocks dominated the day. The Nasdaq has increased even further. For this reason, going entirely cashless might be exceedingly challenging. Even if an investor is right to claim that a market is overvalued, this does not guarantee that the stock market will collapse as soon as the investor sells all of his holdings. In fact, if the market keeps rising, it could overvalue itself much more. Is this evidence that Burry erred by selling all of his stocks then? Not so fast, he says. After selling all of his investments, Burry watched the market increase and had the following to say. Since it has increased by 20 from its low, the Nasdaq is in a bull market. Who came up with this after 2000? In this tweet, the Nasdaq made that 7 times as it dropped 78 points to its bottom point from 2002. Michael Burry claims that the current increase in the stock market is a bear market rally. As the term is known, in the past, stock market losses haven't always been straight downward. Take a look at this Nasdaq chart from 2000 to 2003. The Nasdaq reached its highest point of about 8,200 in February 2000 before bottoming out at about 1,900 in September 2002. In only a few years, the Nasdaq has experienced 4 unique rapid upward surges. By contrasting the recent stock market boom to this historical period, all of these abrupt upward moves and price changes gave investors false hope on the way down. According to Burry, it might be some time before stock prices completely bottom out. Only time will tell if he is currently correct. Just because Michael Burry is selling all of his stocks doesn't mean you should follow suit. Burry is obviously an extremely intelligent man, Having said that, a huge number of other extremely wise investors are currently purchasing equities. Warren Buffett is among them. Buffett, the legend himself, has been investing tens of billions of dollars in stock purchases. So, what are your thoughts about Michael Burry, who sold his entire stock? Please let me know by leaving a comment below. And if you enjoyed this video, please press the like button, turn on the notification bell, and subscribe to Wealth-ology for more videos like this. Thank you for stopping by to watch. See you in our next video. Bye!